Hello dosto, we have created this page for knowledge purpose. We are doing fundamental analysis of stocks and shares with long-term investment and value creation. We have chosen Reliance Industries Limited in our first video. The today's market scenario is as follows. The market is weak from last 1 week. Sensex, Nifty and stock of Reliance is trading below its current market value. We are doing analysis of stocks on the basis of 5 factors as mentioned here. In the next slide ahead we will discuss each slide in short detail. First is earning versus dividend. This slides talk about how much does the Reliance earns and how much they are paying to US in form of dividend. In 2016 and 2017 the company earned 101 per share and 103 per share, from which the company paid to the shareholder only rupees 10.5 and 11 through dividend. After that the company shown sharp decline in earning from rupees 101.30 to 61. The company's earning showing growth from 2018 onwards regularly. The company's dividend payment record is low, that means the company reinvest that remaining amount for the future growth. In this next slide we compare the book value and market price per share, which means how much we pay extra above the actual asset of the company shown in the books. In 2016 new shareholders were paying less than its book value, that means that time the public was paying below the actual asset of the company, which actually means undervalued in compared with actual asset of the company. But as time changes the upcoming shareholders has given high premium above the book value of the share. Why? This is due to expected growth in future, or they have the opinion that the company will outperform in future. In this next slide we will discuss about return on equity and return on capital employed. Return on equity is the percent of profit generated from shareholders' money. This means how much the Reliance earns on every rupee of shareholders. Return on equity is 16.50% in 2016, which reduced to 12.90% in 2021, and whereas the return on capital employed is reduced from 13% to 9.60% from 2016 to 2021. It shows the company has maintained the year-on-year return up to 2019, but after that it starts decreasing. It is important to know that percentage-wise major fall is in pandemic time or corona time. In that time return on capital employed fallen from 13% to 9.60%. Now in this next slide we will talk about the important ratio, which is debt and equity ratio, which shows how much the Reliance has taken the loan from bank financial institution, secured or unsecured, in comparison to equity. As per the data, Reliance has debt-equity ratio of less than 1, which is favorable. The ratio also improved from 0.74 in 2015 to 0.37 in 2022. In simple term, for understanding this ratio, suppose the company has equity of 1 in 2015, then the debt will be 0.74. Now in this next slide we will discuss about the gross profit and net profit growth of the company. First, in short, the gross profit is profit from operation, directly related to business, and net profit is profit after deducting all remaining expenditure which is not direct to the operation of the company, like interest, administrative and selling expenditure, etc. The gross profit of Reliance Industries was 11.80%, which went up to 18.40% highest and fallen to 18.10%, which simply means the company is maintaining the profit near 18%, which is good in the industry. Now comes to special slides in which shows shareholding pattern. You can see some major stakeholders, namely Life Insurance Corporation, Government of Singapore, Euro-Pacific Growth Fund. Now in these slides these are the few acquisition by Reliance Industries in techno business. These are in the field of textile, medicine supply, entertainment, etc. Thank you for choosing Tax Talkers. Please read the disclaimer.